the Champs rights issue? Trust me, this might just be the smartest investment move of the year.
Chams, I've heard the name, but why should I even consider investing?
Alright, let me give you 5 solid reasons why you shouldn't miss this opportunity. Firstly, Champs has been around for over 39 years. They've powered big national projects like BVN and INEC. That's credibility you can bank on. Second, Champs has gone all in on fintech and digital solutions, with subsidiaries like Champs Switch for remittances and payments, Champs Mobile for mobile money, and Champs Access for digital solutions and equipment. They are playing in Nigeria's fastest growing industry. Third, the numbers are insane. 14.91 billion naira revenue in 2024, up 70% from the year before. Net profit, it jumped 1,855% in just 1 year. That's serious momentum. Fourth, all this growth means higher earnings per share and stronger shareholder value. They're not just making money, they're rewarding investors. And finally, fifth, this is your chance to get in. The rights issue is now open. 1 new share for every 2 you already own at just 1 naira 70 kobo per share. But it closes Friday, 12th September 2005. Don't sleep on it.
So basically, trusted company, booming fintech, crazy growth, shareholder value, and a limited time offer. That's a no-brainer.
Exactly. Don't just watch fintech evolve, be a part of it. Invest in growth, invest in innovation, invest in Champs. Subscribe now through Lead Capital PLC.
Hello mom, hello dad. This holiday season, Lead Capital PLC is bringing to your doorstep an amazing initiative for you and your kids. And we know you want the very best for your children. Instead of your children spending all the holiday summer on video games or TV, why not give them skills that will shape their future for life? From the 1st day of September to the 5th day of September 2025, Lead Capital PLC is pleased to introduce the Lead Kids Summer Investment Program that aims to equip children aged 7 to 15 with a clear understanding of how money works, the importance of saving, how to invest wisely from a young age. And the beautiful part of it is fully online, it's virtual. It is fun and it is absolutely free. Opportunities like this do not come often. Register your child today and watch them grow into a confident, money-smart leader tomorrow. There's a link in this video for registration. Click on that link and register your child. Lead Kids Summer Investment Program, raising the next generation of financially empowered leaders.
Good morning, esteemed listeners and investors. We want to welcome you to another edition of our Monday morning breakfast session. We want to appreciate you for your continued audience. We rest assure you that your audience is not being taken for granted. I am Akinyemi Omotayo. Joining me this morning is our in-house equities analyst, Mr. Taufik Kolade.
Good morning, sir. Yeah,
Very quickly, I'll be taking you through the happenings in the fixed income space the last week and what we can expect this week. Very quickly, we'll be looking at the money market and treasury bills market. Interesting times as we see the open repo rates and overnight rates concluded the week at 28.90% and 29.15% respectively. Although system liquidity showed improvement on a week-on-week basis, it still ended the week in a negative territory due to significant settlement obligations that rose during the week. This indicates that despite the liquidity gains, the system's overall cash position remained under pressure from outgoing funds. For the Treasury bill secondary market, it ended the week on a downbeat note, with yields adjusting upwards in response to the primary market auction results and ongoing liquidity constraints. As a result, Average yields rose by 40 basis points, settling at 18.36%. This increase reflects the market's reaction to the auction outcomes and prevailing liquidity pressures, which continue to weigh on market sentiments. In the most recent Nigerian Treasury bills auction, we can observe from the table displayed, the Central Bank of Nigeria offered 230 billion worth of NTBs, which attracted strong demand, resulting in an oversubscription of 166.42 billion. Consequently, CBN allotted a total of 303.79 billion, exceeding the initial offer amount. The auction results showing various swap rates movements across different tenors. The 91-day bills saw 35 basis points increase. The 181-day bills maintained unchanged, and the 364-day bill experienced a significant 94 basis point hike. Taking a quick look at the bond market, the FGN bond market, secondary market, ended the week on a negative note, with selling pressures dominating market activity and overshadowing buying interest. As a result, bond prices declined and yields have increased, reflecting the bearish sentiment. The imbalance between supply and demand led to a market environment where sellers outweighed buyers, influencing the overall market tone. Analyzing the yield curve on a tenor basis, we observed certain distinct movements. The short end of the curve saw yields decrease by an average of 6 basis points, indicating increased demands or improved sentiments for shorter-term instruments. In contrast, the mid to long end curve experienced yield increase of 22 basis points, suggesting selling pressures or decreased appetite for long-term bonds. The divergence in yield movements across the curve may reflect market expectation and sentiments regarding future interest rate trends and economic conditions. Trading activities over the week concentrated in specific bond maturities, with the 2026, the 2029, the 2031, the 2033, the 2034, and the 2038 bonds being among the most actively traded for the week. These maturities attracted investors' interest due to their liquidity, their yield profiles, or aligned with market expectations. The focus on these tenors may indicate investors' preference for specific segments of the yield curve, potentially driven by market outlook, risk appetite, or investor strategies. Across the benchmark bonds, yields saw a general increase, rising by an average of 8 basis points over the week. By the week's close, the average yield had settled at 16.70%. This upward shift in yields suggests a slight decrease in bond prices, potentially driven by changes in market sentiment and investor demand. The 8 basis points increase indicates a moderate adjustment in bond markets, reflecting evolving investor expectations and market dynamics. For the foreign exchange market, the Naira witnessed a depreciation in value, as we saw a negative 0.30 change on the NAFEM window, closing the week at 1,538 Naira 0.08 kobo, as compared to 1,530 Naira 42 kobo in the previous week. And for the forwards, we see rates continue on a steady increase from the 1 month to 1 year forward. Outlook for the week. This week, absent of any substantial liquidity injection or significant inflow, funding rates are likely to persist at current levels, likely due to anticipated outflow resulting from the Federal Government of Nigeria bond settlement. The impending settlement obligation continues to exert pressure on liquidity, thereby supporting the current funding rates. Unless there is notable influx of funds, the market can expect the existing rate environment to prevail, influenced by the bond settlement's impact on liquidity dynamics. Trading activities in the Treasury bills market is anticipated to be largely influenced by prevailing system liquidity conditions. As liquidity levels fluctuate, market participants are likely to adjust their buying and selling strategies accordingly, impacting prices and yields. Depending on whether the system experiences surplus or deficit liquidity, the market may see shifts in demand and supply, driving trading dynamics and shaping overall market sentiments. And lastly, trading activities in the bond market is expected to be subdued and relatively quiet as market participants await the outcome of this week's primary market auction. Investors may adopt a cautious stance, holding off and making significant trades until the auction results are announced, which could influence market sentiments and direction. As a result, the secondary market may experience lower trading volumes and narrower price movements, with participants waiting for clarity on bond pricing and demand from primary auction. That being said, we implore you, lead investors, to take advantage of the market by taking position now. This can be achieved by subscribing to a wide array of products ranging from our lead fixed income fund, which prioritizes capital preservation and growth, offering a low-risk investment option with biannual dividend payments. However, it is essential to note that the fund comes with a 90-day lockdown period during which investors can access their funds. It is worthy to note that currently yields on the fund stands at an 18.56%. We encourage investors to take advantage of this. For investors seeking a balanced portfolio, we recommend the Lead Balance Fund. This fund diversifies investment 50% on high-quality stocks and 50% in fixed income instruments, offering a medium risk profile. With a mix of equities and fixed income instruments, it helps investors to spread their risks. It is suitable for investors willing to take on moderate risk for potential returns. Investors who cannot invest or collect their annual Investors can also choose to invest or collect their annual paid dividends. With a lockdown period of 90 days, it allows relatively easy annual paid dividends. It allows relatively easy entry and exit from the fund. The Lead Balance Fund is currently an annualized yield of 43.45%. We encourage our lead investors to also take advantage of this fund. For investors looking to invest for a fixed period at a predetermined date, we recommend the Lead Gazelle portfolio. The portfolio offers tenors ranging from 90 to 365 days, providing competitive rates that surpass standard commercial bank rates. We encourage investors to reach out to us to enable us share our current rates if they are interested in this platform. For investors seeking to protect their assets from depreciating Naira, we recommend our Eurobond trading platform. This platform allows clients to invest directly in US dollar denominated debt instruments, earning returns in the same currency through biannual coupon payments. Please note the minimum subscription to this platform is $200,000. For investors who cannot meet up to the $200,000 threshold, we introduce our Lead Dollar Fund. This product offers a viable alternative with a minimum subscription of $1,000 and holding period of 180 days. Dividends are being paid biannually and a low risk profile that's 9.23% annualized yield. That's it from us on the fixed income space. Allow me to hand you over to our in-house equities analyst, Mr. Taufik Akolade, to give you insights on the happenings in the equity environment last week and what we can expect.
Thank you, Mr. Kemi. Thank you for taking us through the happenings in the fixed income markets. Lead investors, good morning, everyone. So you are welcome to another edition of Equities Market Review. In line with our expectation, although the market also witnessed another negative sentiment. If you look at our projections and our expectations for the week, we had already predicted that most of the takers have actually reached their 52-week high, so which was the reason market witnessed some correction. So we will still maintain these key headlines. We are going to take a review, and we are also going to make provisions for a lead topic for the week because our combination has 3 layers. So you have the buy, hold, and then the sell. We have also expanded our coverage to about almost 12 sectors for those who also want to diversify their portfolio, so that you can have an opportunity to diversify your portfolio across various sectors other than the key major sectors, the banking, insurance, consumer, oil and gas, and the industrial. So we've also included aviation, real estate, construction, healthcare, and a few others. So valued investors, you have the opportunity to select from arrays of the sectors we have also included in our recommendation. So we will be talking about the review of the equities market last week. So for the entire 5 trading days, sentiment persisted for the first 3 out of the 5 trading days. So it was only on Friday and at the beginning of the week, market witnessed some uptick in the prices of the selected stock. But the reasons why we saw sharp depreciation in the market last week was because some of the highly capitalized stocks, the likes of BUA Cement lost almost 10%. Even Dangote Cement, other industrial segment of the market, also lost 9.9%. We saw Stanbic IBTC people taking profits. We also saw a few other companies like a GTB, Stanbic Bank, even Zenith Bank, and a few other middle capitalized stocks. If you look at this graph, and you could see that from Monday, the graph was on a downward slope because it kept taking profit. So, but the most important thing is that the investor should not be wary of what is happening in the market. There's no need for you to be planning, because it's expected that investors, it's an opportunity for them to also witness what is happening in the market. Why those who are investing in the market for a very long time, they have witnessed issues like this, times like this, that the market will continue to witness correction, especially when it's get to 52 weeks high. And that's exactly what is happening. So when tickers or some companies get to the overbought region, then you are likely to see profit taking. So, and that's exactly what happened. There's no cause for alarm. And there's still liquidity within the markets. The key catalysts, the key drivers of the market, and they are still looking very positive. We've seen inflation pick up in the month of July. It's still moderated. We've seen the GDP growth rate. Consider what is happening within our local economy. This is the global economy. That's not going to determine whether we'll continue to advise our customers, whether they should invest in equities market or the fixed income market. But the truth is that the variables, the key indicators are still very strong, and there's still room for growth. There is room for the prices to still go up, because those stability involving the exchange markets and then all key indicators will also going to contribute to the improved earnings most of the companies that are listed in our market. So last week we saw quantity traded still centered around financial service, almost 78%, because with some major activities around insurance company and then the banking. Why we saw minimum transaction, a minimum volume trading around the consumer service industry and all. So that's why the financial services dominated the larger part of the start. And then that also attests to the fact that the financial services is very strong in our market. So as in our recommendation, you are seeing many stocks being recommended under banking industry or insurance. These are the reasons why the pie chart is also expanding anytime we are making this presentation. So in terms of week to date, last week, markets also lost 2.51%. We now saw depreciation in ASI to 141,000. And then we also noticed that the volume also reduced, while the value also increased. The volume reduced to 4.7 billion from 85.65 billion. But in terms of the value increased to 107.43 billion. So that's still meaning that the key drivers, the activities, the daily trading volume and weekly volume are still very strong. So that is to tell us that the market correction we have seen in the market is just temporary. We are likely to see more investors coming to the market, and those who have also rebalanced their portfolio are also responsible for the depression we have seen in the market. But in terms of high trading volume, we saw the Universal Insurance, Zenith Bank, and FCMB. They accounted for like almost 25.16% in terms of the volume for the entire transaction, and in terms of the value, 27.40%. That's a week on week. While the market capitalization also moderated to 99.21 trillion. The good things we also need to note is that anytime there's a correction from the market, for those who have been waiting to take advantage of a particular stock price, once there's a depreciation or there's a correction in the market, that will also present new opportunities, because the persistent or continued depreciation in the market is just temporary. It's not really a setback, but just a correction. So those who have been if we check the major indices last week, it was only one index actually appreciated. That's NGX Consumer. It was also marginal. While the banking, insurance, industrial, oil and gas, they lost 3.48%. That's for the NGX banking. And then insurance, 4.17%. Industrial, 4.42% because of the profit taking around Boa Cement and the Dangote Cement. While oil and gas, we also saw profit taking around some of the tickers under that index. So, it's in our various claims that this depreciation in the sectoral indices is an opportunity for you to be able to invest, so that before the market rebound, because market is likely going to rebound. So take advantage of any corrections in the market for you to be able to grow your portfolio and then so accommodate good companies into your portfolio. So that's just the overview of the market. In terms of dividend qualification, nothing to talk about. We only observed that last week, Presco paid their final dividends for 2024, and then Okomo also paid their 13 naira in dividends for 2025. So we encourage all values customers that it is not advisable for you to also reinvest your dividend, final or interim. You can use the same dividends, you can send it back to the capital, you can buy the same company, it will increase your holding, and over above time, you'll be better than those who have not invested their dividends. So we encourage people who have received their dividends that will ploy it back and invest in Presco and Como as they have received it. Why those who have not received their dividends can also reach out to our customer service for follow-up. It's our responsibility to ensure that you get your dividends. Boa Food dividends is going to be paid by November, and the qualification they have already passed. That's 21st of August. So for now, there's not any major sickness that their dividends is in the pipeline. But as we receive that within the market, we're going to update the house accordingly. In terms of our top recommendations for the week, we are taking our time to also ensure that we also extended the coverage. We are almost 12 sectors. So for the banking, for this week, we'll continue to change our top weekly recommendation. It cannot be stagnant, cannot be static, because we continue to do valuation around those stickers. So for this week, our top picks for the banking industry, we have the Access Bank, we have the TTB, we have the Zenith Bank. The TTB has lost at almost 3 or 4%, and that also presents a good entry price. For those who have been waiting, don't also forget that this stock, when it was listed in London Stock Exchange, got almost 111 naira. But this is a good time for you to be able to take advantage. Those who have been waiting for the price depreciation. So the top pick for the week, Access Bank, GTB, and Zenith Bank, we are putting them on the top picks for the banking industry. While for insurance, ICO and Master Insurance, and then for industrial, we are only putting Bejapin as a top pick. While for the cement manufacturing, Dangote Cement and West African Portland Cement, also known as a Lafarge. And for the consumer, we're also putting forward only flour and the Nigerian breweries. Hospitality, for those who are also interested in hospitality ticker. So you can take advantage of Ikeja Hotel. In our recommendation, the transport process is overvalued, so we recommend sell. While for Ikeja Hotel, it's still within the institute value. You can take advantage. For the healthcare, May and Baker, aviation, Sky Aviation, oil and gas, Arade and the Seplat. Telecom, we have MTN. Consumerance, we have Custodian. While construction, which is the newly included sector in our weekly recommendation, is Julius Berger. So for those who also want to invest in real estate and construction, you can also take advantage of the current market price of Julius Berger. So we have 18 stock as our picked recommendation for the week. Why we have also done another extraction from the general list of our recommendation. So our general recommendations for the week, for this new week, we have 35 stock. So in our recommendation, so we have the Access Bank, we have the ETI, we have the GTB, we have First Bank, UCAP, Zenith Bank, ICO, Personal Insurance, Bejapin, Kutis, Dangote Cement, Lafarge, Flour, NASCOM, Presco, May and Baker, Arade Seplat, CWG, Consumer, and the Custodian, Health Africa, MTN NACO, and the Sky Aviation. They are also our recommendations for the week. Why our old recommendation, we are putting Better Glass. It has also reached 52-week high. So we are putting Better Glass on hold. Boa Cement, we are putting on hold. Fidelity Bank, Stanbic IBC, Cadbury, Como Oil, UACN, and AGP, we are also putting this stock on hold. Why our sell recommendation, African Prudential, Sterling Bank, and the Transport Hotel, as I've said earlier, is overpriced. So we recommend these 3 stocks for sale. So even including Sterling Bank. So for our customers who want to take advantage of the elevated price or those stocks that have reached their 52 weeks high, I think you can sell and invest in any of the stocks that are also undervalued before they start moving. So it's also our responsibility as your financial advisor that anytime we see a new company coming to the market, we need to update the house. If you remember in 2024, when all the commercial banks, most of the commercial banks, they are coming out to this capital. And remember, we did some analysis on GTB, Zenith Bank, UBA, Fidelity Bank, and Access Bank, and we did advise all our value customers they should take advantage of those window. And I thank God, even including Wema Bank, and I thank God that some of our customers they listen to advice. If you remember, the GTB, all these companies we have talked about, I've just mentioned. If you look at their right price of public offering, they are almost 50% of the price they are currently trading. So when any company is coming into the market, we have to do the analysis and advise you accordingly. For the UBA rights, we're advising all our clients that they should buy from the market, because if you are buying the UBA at 15 naira right issue, you are missing a discount of almost 180 kobo. So we advise you that you buy from the market. If you buy from the market, there's a discount of almost 1 naira to 50 kobo. If you now use our little trader application, you enjoy like almost 2 naira discount on UBA. As for the CHAMS, the CHAMS has also opened their right issue. And I also conducted some analysis around the tickers. Of course, for a number of years, this company hasn't paid dividends. But the good thing is that you don't always consider dividends for some companies sometimes. You also need to look at the growth prospects. So we have done analysis on the Champs PLC, and we also look at it that for all our customers who are existing shareholders of Champs PLC, file is open. As at last Friday, the company price closed at 2.73 naira, and they are coming out to do the rest at 1.07 naira. For our customers, we want to encourage you to take advantage of this window, because if you take advantage of the right price at 7 naira, there's a gain of 60.59%. And then if you look at the share outstanding of Champs PLC, it's currently at 4.7 billion, and the company is raising 2.34 billion additional shares. And essentially, for them to be able to grow their income, before if you look at their financial, which I'm going to speak to when we go to the other slide, the company finance cost has actually gone up. But when you see a company that is operating in a market that is very promising, like the fintech, they have first subsidiaries, they have Champ Assets, they have the Champs Card, they have a Champs Switch, and they also the Champs Mobile. When you look at these four subsidiaries under the Champs holding, they are more of, they are companies that have potential to grow. If you look at the CWG5 some years ago, about 3 or 4 years ago, it was trading far below the current market price. But when the company repositioned for growth, we see CWG trading around 16, 17 naira. And I believe over time, this is likely going to happen to the Champs PLC, because we've seen involvement development in the fintech industry. And those subsidiaries over time is going to improve the earnings of this company. So we encourage all our value customers to take advantage of the current current right price of Champs at 1.07 naira, 70 kobo. So take advantage, don't miss the opportunity. Groupa is still open for those investors who register, names appear in the registers of the Champs PLC or Champs Holding as at 16th of June. So we've been making some adverts around the Champs PLC. We don't want you to miss out. We're also encouraging some of our value customers to also apply for additional shares, because over time, you may not see this current market price. In the last 5 years, Champs has been trading around 23 kobo, 24 kobo. But when the same public now begin to see improvement in their earnings, the price started increasing. From year 2020, when the stock was trading 23 kobo, it has gone to 3.67 kobo at the 52-week high. So we don't want you to miss out of this opportunity. We've sent some videos, and if anybody needs any information regarding this Champs investors presentation, we are glad or be willing to provide this information. So Champs PLC is still open. We want to encourage all our value customers to send out the form, fill your form, and send it to us. If you don't want it, we're not going to encourage you. We owe you that duty to ensure that any stock you are investing in, there are companies that can give you a better return in future. So this is just the overview of the Champs PLC. In terms of the performance, that's the financial for the year 2023. We have also looked at the key line items for the Champs PLC. Look at the finance cost, it has gone up by 158%, and that's the reason why the company is coming to the they are coming to the market to come and raise the right issue, which is a easy sort of fund. By the time the right issue becomes successful, it's going to reduce the finance cost, and that is going to increase the earnings of the Champs from 9 kobo above that. Because last year the earnings per share stood at 2 kobo, now 8 kobo. We expect that by the time the capital raising is successful, we are likely to see that improve in their balance sheet and in their income. This is also the 5 years projection. The company has also projected that in the next 5 years, they are going to increase their earnings per share from 1.23 kobo to 4.62 kobo. So this is a very good projection, and then there's the room for this company to grow in the industry. So we encourage you to fill all your form. For the market expectation for the week, and last week, NGX entered negative territory for the second consecutive week. That's hungry market correction. And that is also likely to happen this week for the first 2-3 days of this week. But that is going to, market is likely to go to the pound. Selling pressure outweighed by interest last week, which was the reason why we market also witnessed that. So we also believe that by the time the market also receive the half-year performance of the banks, the likes of Access Bank, GTB, Stanbic IBTC, UBA, is also going to serve as it's also going to improve the investors' confidence more in the market. So we are expecting that to come out soon. The CBN is still undergoing, it's still betting those results anytime soon to win the market. So lastly, because of our time, this week we predict that the NGX all-share index is likely to close on a flat note. and it's going to hover between 143,500 to 144,000. But the good thing is that for the first 2 trading days, today and tomorrow, market is still likely to witness that correction. But towards the middle of the week, the correction is likely going to wipe down, and we are likely to see bull returning on the market. So market is going to close on the platform. So with this, we have come to the end of presentation. So it's time for the Q&A. Thank you. The floor is open. Okay, good morning. And thanks for the presentation. It's what's the current market price? Okay, for the first 2 trading days, we are likely to witness that. But the corrections is going to wind down between Wednesday and the end of the week. So market is likely to close on a flat note, but we're moving towards a positive trend. More questions? Can you read the question? Okay. What's delaying the approval for the H2 results? Yes. The central bank needs to ensure that they vet those results. All the major banks have submitted their result to the central bank. Central bank needs to ensure that all these banks meet their capitalization. One, they also need to extract whether the issue of a forbearance has also been taken care of before they can be allowed to pay dividends. So that's why it's taking time. So we believe in a couple of weeks, the result is going to be out. There's no cause for alarm. Most of these banks, they have also stated that they are going to pay dividends, and we are sure they are going to pay. You buy UBA rights, for now we are not advising you to buy. Go and buy from the market. It's cheaper for you to buy the market, especially when you use the trader application. You get a discount of almost 2 naira if you buy directly from the market. So the right price is 15 naira. You even take time before they also credit your rights issue to your account. So you can sell when you see uptick in the price of UBA, especially if you take to do that out. Okay, we appreciate you get the slide after the meeting. Okay, thanks. Even though some of the certain level of audio was scrambling. Okay, scrambling. Okay, sorry about that. Please, we'll work on that again so that you'll be able to receive the audio clearly. Thank you for the observation. UBA right, we are not encouraging you to buy. So buy from the market directly, which is a lead trader.
Buying the right on the floor.
Buy the right is not even. Okay, sometimes you can buy the right from the floor. By the time you add it, it's even cheaper for you to buy from the floor. You can also buy the right from the floor. You can reach out to us. We also buy a right from the people from the floor. If it's cheaper, especially when you compare that to the right price of 15 naira. I think with this, we have come to the end of today's presentation. We want to thank all our valued investors for taking their time this morning for joining this program. So we wish you a successful week ahead. We want to assure you after this, before the noon, we are going to take the flight. Our weekly stock recommendation has been sent out. You can also look at it for you to be able to take action. But the good thing is that the current market price presents good opportunity for those investors that have been willing to buy a particular ticket at a particular price. So thank you very much. You have a good week ahead.